Well, Wall Street is beginning to panic because Donald Trump is actually doing exactly what he said he was going to do. Most of Wall Street believed that there was basically no chance Donald Trump would implement stronger tariffs than what he conducted in 2018 because inflation is just too high today. And by initiating large tariffs, we might actually worsen the inflation situation. Well, we kind of got exactly the opposite of what Wall Street expected. We got exactly what Donald Trump said. Now take a look at this and you can get a sense for how Wall Street is reacting. This is a sheet from Deutsche Bank. It says, huge shock. First thoughts on the tariff announcements. The macroeconomic implications of such tariffs are likely wide-ranging and materially disruptive, especially outside of the US. By our estimates, the market was roughly pricing in the equivalent of a 5% universal tariff being enacted in the coming months, equivalent to about a 30 basis point hump in inflation. However, the announcement this weekend was about 3 times larger than expected, with reasonable pass-through assumptions. We expect a 1% headline inflation impact if tariffs are indeed sustained. These tariffs are roughly 5 times as large as the total cumulative sum of all of the tariffs that Donald Trump implemented under the first administration. As a result, expect a large and volatile market reaction. Well, this is exactly what we're seeing in the market right now, especially since there's been this, quote, underlying Trump put embedded into the S&P 500. But wait a minute. What happens when Donald Trump is asked about the market and he says, people will understand. We're doing what we need to do to correct the wrongs of fentanyl or the drug cartel or otherwise. Well, all of a sudden, the Trump put seems a whole lot weaker. What about Jerome Powell? Donald Trump is going to pressure him to lower rates, right? Maybe not. Trump, when asked about Powell not cutting rates, Donald Trump just said, I think holding rates was the right thing to do. What? That was the opposite of what you said 2 weeks ago, bro. Then people were like, all right. Well, at least you haven't hit the European Union yet because, we've got a pretty big $300 billion deficit with the European Union. And to this, Donald Trump says, oh, those will definitely happen. Europe is really taking advantage of us. You think Canada and Mexico is bad? Let me get started on Europe. So this is leading a lot of people, including cartoonists, to say Donald Trump doesn't realize what he's doing and he is literally pissing in the wind. Here's said cartoon. Now, look, it's entirely possible that this is all just part of Donald Trump's chaos theory. After all, the art of the deal, the more chaos you create, the more you are in control of the narrative and you get to solve the problems. And maybe all of this will get solved over a few different phone calls and Donald Trump will get exactly what he wants. After all, we still have until the 4th for these tariffs to take effect, so that gives us, about 2 business days. And that's not even for an expiring coupon code on the courses, because we don't have one right now. It's for expiring no tariffs. It's like a reverse coupon. Anyway, if the tariffs stay in effect for 12 months, Piper Sandler believes that Canadian real GDP will collapse by 5%, negative 5%, that is, right? Mexican real GDP will collapse by 8%. It's negative 8%. And US GDP will fall from 2% to 1%. So obviously indicating that the United States has significantly more leverage here. But let's be real, there's really no part of North American industry that isn't affected here. There's a reason why GM and Ford are down as much as they are. Currently in the pre-market, you've got Tesla down about 3.5%, Ford down about 4.5%, and GM down about 7% because of how much our supply chains have been integrated. Batteries coming from Mexico, critical minerals coming from Canada. GM and Ford having, and as well as other auto manufacturers, having significant factories built out in Canada and Mexico. Now, Tesla having a unique advantage here, given that they canned the Giga Mexico plans and essentially have American manufacturing, which is exactly what Donald Trump wants, Texas and Fremont, you still have risks when that European trade war begins. But how this trade war plays out between Mexico and Canada will probably set the stage for how we expect the trade war to play out in Europe. And I have to say, when Wall Street starts turning fearful, I start getting at least a little bit excited. I kind of start thinking to myself, you know what? Like, when Wall Street does this, I happen to get more bullish. So you take a look at this. Here's just a piece from Wall Street where they say, in the back of my mind, I'm worried that the administration will like the revenue generated from tariffs, and there's a non-zero risk that the tariffs end up staying. I'm moderately bearish now, bonds and equity, but moderate is the key word. You should stay nimble. Okay. That is the first time in about 20 months that I've actually seen someone, from an institutional point of view, start getting nervous. Sometimes those are really good buying opportunities. Now, let's be real. Is the economy currently pricing in a recession as a result of this? I would argue no. How can we see this? Well, it's actually pretty simple. Just look at the yield curve. The yield curve is actually compressing right now. Usually when we have a recessionary shock, you see the yield curve steepen. Well, the difference between the 10 and the 2 right now is about 27 points, which is about 12 points lower than where we were, a week and a half ago. So in English, no, the market doesn't appear to be pricing in a near-term recession. Rather, the market appears to be pricing in an earnings shock that is the fundamental, well, and part of this is probably just an overreaction, as it usually is, so who knows, we might end up having a nice recovery today. We'll see, especially after we get some good news out of the phone call. Looks like we'll be able to work out a deal. Market just skyrockets, maybe, or no deal happens and the market might fall a little bit more. But what you really have in the short term is people trying to price in that everything is going to potentially get a little bit more expensive. And while this will be inflationary, it will be limited by how much those companies can actually pass on those higher prices. Remember, we expect oil prices to go up because of those energy tariffs on Canada, about 10%. But food prices will also go up, especially since 86% of our tomatoes come from Mexico, 83% of our imported beer made from malt comes from Mexico, 83% of our cabbages, cauliflower, kale, and other items come from Mexico, as well as things like dates and figs and pineapples, avocados, guavas, mangoes, and, fresh or really dried fruits in general, lots of these. Over 70% of these come from Mexico. Maple syrup obviously comes from Canada. We send them Florida orange juice. But the point of these things these are usually excluded from our core measures of inflation. Now, core measures of inflation could trickle up as well. This is what people are concerned about. But usually that is limited by how much companies can actually raise prices. In this market, it's become a little bit harder for companies to raise prices. So it's likely that Wall Street is simply pricing in that worst case, companies are just going to have to take it in the margin. That is, any kind of extra tariffs they face from supply chains, they might have to absorb those costs, and therefore you end up seeing EPS decline. If you look at Tesla, for example, you actually saw in the fourth quarter, earnings per share from energy products declined from about 30% to 24.6%. That's an example of a company starting to take it in the margin. And that's not great because Tesla is really right now propped up on high earnings by energy, and then of course a lot of hope around optimism around Optimus, and robotaxis. But what's very important here is that Wall Street is trying to price in fundamental earnings per share impacts of something that honestly in a week from now could blow over. Now, maybe it won't. Maybe it won't blow over. Maybe this will continue to go on. And I think that's where we'll have to see where the sentiment of today's phone call, so to speak, goes and how progress evolves here. Progress over the next few days will be critical to monitor. Can these tariffs be recessionary in the longer term? Absolutely. But that's not what the market is responding to right now. Now, yes, crypto markets were liquidated to the tune of $2.2 billion, one of the largest liquidations we've seen in quite a period of time, certainly over the last year and a half. It's going to hurt for people who are on margin to go through this volatility. But this volatility could end up creating a buying opportunity. I generally love tariffs for buying opportunities, as long as they don't rise to the level of being recessionary. I don't think Trump is going to push it that far, especially since, remember, tariffs, beyond being a negotiating tool, they are economically inefficient. And Steve Bassett knows, that they are economically inefficient and that a stronger dollar does not actually bring us more U.S. manufacturing. Now, we'll see how this actually weighs on their opinions. Do recognize that the currency markets already discount some of the impact of tariffs. Now, this is a little bit more complicated to understand. I'll just give you a very quick example. Let's say that you're going to go buy something that costs 100 Canadian dollars. Okay, you're going to buy 100 Canadian dollars of maple syrup. Well, in September, you would have paid 74 US dollars for that because every Canadian dollar is worth about 0.74 to the USD. Well, today, we would only pay about 0.68. Oh, but wait, now you have to add the 25 Canadian dollar tariff. So multiply that 100 Canadian dollars by 1.25, costs you $125, times 0.68 is $85. Okay, so now compare your total cost today with tariffs, $85 today, US dollars, compared to what you paid in September before the trade war, $74. Well, the difference you can see is 14.8%. So the market has already discounted these tariffs for you by 10.2%. The currency market does some of this for you. So yes, some of the dislocation you see in the markets are basically just markets calibrating to, all right, we might see earnings down a little bit, stronger dollar, or a weaker foreign currency or whatever. That is also going to mean that revenue that comes in from Europe to the United States for companies like Apple is going to be weaker. Revenue that's collected in China from Starbucks is potentially weaker as the US dollar gets stronger. Remember all those FX currency adjustments, FX charges basically companies end up taking in their earnings reports, and their earnings are lower because of the strong dollar? This is exactly that. Keep in mind also the euro has not been at close to parity since about the summer of 2022. And right now the euro is trading at $1.03 for a US dollar. So this is really, it's almost back at 1-to-1, which is kind of wild. So to clarify that, it costs $1.03 to buy €1. They're basically almost equal, which does mean we're probably going to have pretty cheap European vacations coming up if you have any plans to go to Europe in the spring or summer here, assuming this tariff war keeps going and the dollar keeps its strength up. It becomes desirable to actually go vacation in some of these areas. Justin Trudeau is like, don't come vacation in Canada. Don't go vacation in the United States. Sorry, that's what he said. Don't go vacation in the United States, stay in Canada. But it actually becomes more desirable for Americans to go vacation in Canada because the Canadian dollar is weakening, 68 cents right now. That's a bit on tariffs. And really, I think this is going to be a very fluid situation. So I don't think it makes sense to spend much more time on this beyond saying it doesn't appear to be right now something that we're pricing in as recessionary. And it does not appear to be something that markets don't at least somewhat discount as potentially disappearing soon. We'll see. Now, what I do want to talk about very briefly is I want to talk about Musk's Spaces with Joni Ernst. I really dislike this, that I will say I only listened to about 20 minutes of it, and then I shut down. So it was Elon Musk, Vivek, and Joni Ernst. And basically, Joni Ernst goes on the Spaces, and she's basically the tool for, why Doge is so great. She goes on and kind of spews this stuff that we've heard a million times before. Things like, there are reports that indicate there were earmarks for how money was spent for shrimp to work out on a treadmill, and, studies were done on penis sizes, and we spent multi-million-dollar grants to agencies doing these things. And what you really had was this situation where Joni Ernst is throwing out this information, this data. Only 6% of the federal workforce shows up in person. And then you have Elon, who's not asking, hey, how much was specifically going to the shrimp on treadmills? obviously even $1 seems like it's too much. How much was going on to penis-sized papers? Tell me more about this federal worker issue. There was no critical debate. There was no fact-checking. It really, honestly, it felt like a politician throwing out their political talking points, and Elon's just like, that's ridiculous. Oh my gosh, that's crazy. Do you need a few $1 billion to go fight this? Because the reality is, the money that was spent on the shrimp treadmill study, which had to do with changes in water quality for shrimp, like how do they respond, it was actually a very small experiment, somewhere around $1,000. Now, I'm not saying we should have spent $1,000 on a treadmill to help understand how shrimp respond to changes in water quality. I'm not a scientist. But that all of a sudden has become this blown up thesis that see how wasteful government is? Just like the penis study example where a small grant was given to, I believe it was 2 authors to study, to basically write a report or whatever. And it was a fraction of the entire budget, essentially, of whatever was granted here. I'm not saying that either of these 2 things should have had money spent on them, but what's happened is these smaller expenses have defined the entire grants. And so now they're political talking points. So they'll say, oh, well, we're wasting $50 million on this agency because they're training shrimp on treadmills. It's like, well, no, like $1,000 went to a little side project out of $50 million. And so you're mischaracterizing all of that money that was spent. And so some people are looking at this going, oh my gosh, Elon, if you're not looking at this stuff critically, what if you actually are starting to cut things that matter? I'm not, again, saying the penis size study or the shrimp stuff matters. That's just what has been highlighted. But what about all the stuff that hasn't been highlighted? And the fact that Elon wasn't critically questioning into this is especially concerning. Joni says only 6% of the federal workforce shows up, but this was based on a survey of 6,300 federal workers. That was a non-scientific survey that had to do with should people go back to work, can they work at home, this, that, or whatever. The Office of Personnel Management indicates that right now 54% of federal workers work fully on site. That only 10% of the federal workforce works remote, which is almost exactly the opposite of what a senator said, that 6% of federal workers show up. But, Elon hears the data. Oh my gosh, this is terrible. I'm not saying my data's right. I'm not here to defend the government. I think there's a lot of waste in the government. I'm just saying, I just thought that somebody who's supposed to be as, with it as Elon Musk really seems like he doesn't care about anything other than all government spending is evil and ridiculous, and Republicans can do no wrong. Like, I'm not trying to take political sides here. I don't really care. I'm just pointing out that when I got kind of grossed out by how the Twitter Spaces was going, so I stopped listening to it because it was just, it seemed like logic was missing from it. And I didn't want to spend so much time going super deep on shrimp studies. I really don't care. But this was my initial reaction. So we'll see. Anyway, and again, I'm not arguing that there's not a lot of waste. There's a lot of waste, but it did make me somewhat concerned at least. Anyway, there you have it for today. Thank you so much for watching. We'll see you in the next one. Goodbye, good luck. If you found this helpful, please subscribe.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.